This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
This lecture looks at question 1 from the June 2010 Advanced Performance Management paper. You're strongly advised to go to the ACCA website and to download this paper. This will make it much easier to follow the lecture. So here is question 1, and there is a detailed appendix after the requirements. As always, you should look first of all at the requirements. Required: prepare a report. So we have to make sure that we do prepare a report in a report format, and it is of appropriate language for the directors. This question is essentially all one part, and parts 1, 2, 3 and 4 are indicating very closely what the report has to cover. So let's look at that. Discuss the importance of non-financial performance indicators, giving examples, balanced scorecard, improve the performance. So the report discusses the importance of non-financial performance indicators and evaluates, giving examples, how a balanced scorecard approach may be used to improve performance within SBC. Now that's quite a nice question, because most of what appears in a balanced scorecard, and we'll cover this later, is non-financial performance indicators. Only the financial perspective relates to financial performance indicators. So we've got quite a good ready-made structure for that. We must remember to give examples of how use of the balanced scorecard could improve performance within SBC. Contains a calculation of the average cost per chargeable consultation for both full-time consultants and subcontract consultants in respect of 3 categories of consultancy services. There's only 7 marks for that, so one assumes that the calculations aren't going to be too difficult. Suggest reasons for the trends shown by the figures shown in the appendix. Let's hope that doesn't depend on the answers that we got from part 2. And discuss the potential benefits and potential problems, so both of these are required, which might arise as a consequence of employing subcontract consultants within SBC. There will be 4 professional marks awarded, and professional marks will be given towards the structure of the report, dividing it into paragraphs, each with a heading, using appropriate language, making use of appropriate models as seems suitable. Having read the requirements, we can go and begin to read the question with a bit more warning about what we have to look out for. And the first thing was non-financial performance indicators and the balanced scorecard, and how we could improve performance. So the Superior Business Consultancy, which is based in Jayland, provides clients with consultancy services in advertising, recruitment and IT support. It began trading on the 1st of July 2003 and grown steadily. The following information, together with that contained in the appendix, is available. 3 types of consultants are employed on a full-time basis: advertising, recruitment and IT. During the year ended 31st of May 2010, each full-time consultant was budgeted to work for 200 days. All consultations had a duration of 1 day. During their 200 working days per annum, full-time consultants undertake some consultations on a no-fee basis. These are regarded as part of business development activities. SBC also engages the services of subcontract consultants who provide clients with consultancy services in the same 3 areas. Most of these people have worked for SPC for 3 years. During recent years, the directors of SPC have been concerned that the company's systems are inadequate for the measurement of performance. This was further increased after each read a book called How to Improve Business Performance. So there's some concern here about how they measure performance. Let's look down at the appendix. So here are the figures. Let's look at some trends. We've got 1 actual and 2 forecasts. So number of full-time consultants, level, recruitment going down. So recruitment, as we'll work on there, seems to be a bit disappointing. IT support seems to be level. Salaries, pretty level really. Very small percentage increase from 2010 to 2011. I wouldn't have thought was anything to worry about particularly. 4% or thereabouts. The number of chargeable consultations is very interesting. This goes down from 2 years. That one goes down and down. And IT support goes up on the first year, then goes down. So it looks though business long term is in a decline. This may allow the additional time, the additional percentage of time spent on business development activity to rise, because there's a rise there, and a rise there. This is non-earning, of course. Other costs that we perhaps have: full-time consultants down and then up. I'm not quite sure why that's happening, because full-time consultants, there's 20, 30, 50, there's 100 there, and there's 90 there. Subcontracting people, we have not much information on that. We don't have the number of subcontract consultants, but it goes up very, very steeply and then kind of goes down, and it's kind of interesting why that may have happened. It's not immediately clear. However, this is simply what you do when first looking at a question. In your kind of 15 minutes, you don't know what to make of it. You just have to make, if you like, fairly obvious observations. You will have no idea usually what may be at the root of this. And then I will go back and think about requirement A, because requirement A has got very little to do with any of these figures. Requirement A is very theoretical. Non-financial performance indicators, balanced scorecard, and we have to relate this to a kind of consultancy business with recruitment and IT and so on in it to show how they might be able to use the balanced scorecard to improve their performance. So here's the first requirement again. Report, we know about. Non-financial performance indicators. Giving example, balanced scorecard, improving performance. So what is this balanced scorecard that's being talked about here? And this is a balanced scorecard. 4 perspectives: financial, customer, internal business, and innovation and learning perspective. And the important thing to realize is that these represent a hierarchy. Really, the end of the story is doing well financially. And that's what's measured by the financial statements. But that doesn't explain why you do well financially. And really, why you do well financially is that you have happy customers. Customers are your only source of revenue. If they don't keep coming back, if they're not prepared to pay good prices, you're lost. What makes for happy customers? Well, it is that you do well what you say you're going to be doing, whatever your business is, whether it's manufacturing or providing a service of some sort. You have to do it well. That's what makes your customers happy, keeps them returning, produces loyalty, produces goodwill. And finally, we have to realize that although we might be doing well now, nothing stands still. Our competitors will be battling away, trying to overcome us, trying to improve. And what we have to do is to make sure that we don't rest and assume that because we're good now, we're the best now, we'll always remain the best, and we have to keep innovating and learning. And this will give improved internal business perspective, will keep us at the top of the pile, will keep us competitive, will keep our customers happy, and in the long term this will lead to good financial results. These are sometimes regarded as leading indicators. These come first, and it may be a little while before you actually enjoy the rewards of investment which is done further down the balanced scorecard. Now we have to give examples relating to the scenario, and the scenario was a consultancy business, and it was dealing with a consultancy business, and it was dealing with advertising, recruitment and IT. So these are our non-financial indicators. This is really our financial indicators here. So we have to think of examples of these non-financial indicators. How would we measure the customer perspective? Well, it's very much to do with items like sales growth, number of new clients that you win, number of existing clients who keep coming back, repeat business and so on, perhaps satisfaction surveys. Any of these will measure to some extent the customer perspective, the customer happiness, if you like. Internal business perspective, how well do we do what we do when we're actually dealing with the business of consulting in these three areas. And I suppose we would be thinking of, do we come within time and budget? We'll be suggesting advertising campaigns, we'll be suggesting IT projects and so on. Are we good at estimating the time and the money that these will take? Idle time or efficiency or amount of time billed to clients is something to do with internal business perspective. We might be able to measure in some of our areas of expertise and consultancy the time taken to accomplish what we want to accomplish. This can be difficult in advertising and in IT, where each project is likely to be unique, but in recruitment, perhaps how many applicants do we manage to attract to an advert? How many times do we manage to fulfill a vacancy? Or how long do new recruits stay with the new employer, for example? If dealing with IT, we'll be able to measure perhaps the consultancy projects which fail, which end up in an IT project that doesn't work very well, or which is unreliable, or something of that sort. With the innovation and learning perspective here, we can be looking at the number of qualifications gained by staff. We can be looking at maybe the number of new products brought to market. We have to be careful on this. It is a service business providing consultancy, but we could be looking at maybe updating the website to effectively address new services brought to market. Could be looking perhaps at the number of new markets entered, the number of new IT systems which we become expert at if a new operating system has been brought out and so on, how up to date we are on employment law. Again, relating in a very kind of common sense, not terribly clever way, but a very basic way, how we might be able to measure innovation and learning in this consultancy business. And finally, at the top and the end result, we have the financial perspective. And I suppose we have to look at that. The question is mainly about non-financial performance indicators and non-financial indicators. But financial perspective is pretty easy. It's things like gross profit percentage, return on capital employed, net profit percentages, a measure of cash flow, a measure of costs to revenue, and so on. And you can even get into stuff like expected value added, return on investment, residual income perhaps might be relevant in some cases as well. And you set it out in a report, an introduction, and then I would have headings, basically what the balanced scorecard is, and then I would go through the 3 non-financial performance indicators, heading for each, and the financial perspective, and explain then how improving the non-financial performance indicators should eventually lead to an improvement in the financial perspective. The second requirement of the report is to calculate the actual average cost per chargeable consultation for both full-time consultants and separately for subcontract consultants in respect of each of the 3 categories of consultancy services during the year ended May 2010. The information we need for this is in 2 places. First of all, there is the set of notes before the requirements, where we're told that during the year to 31st of May, each full-time consultant was budgeted to work for 200 days, and each consultation had a duration of 1 day. We also know that during the 200 days, full-time consultants undertake some consultations on a no-fee basis. This is part of the development. We also see that SPC engages the service of subcontract consultants who provide clients for consultancy services in the 3 areas as well. Having taken that information on board, we then need to go to the appendix and just see what's there. So we have to calculate the actual average cost per chargeable consultation for both full-time and subcontract for each of the 3 categories. Actually quite a tricky little calculation. So let's just see how you would go about it. So we know there are, if we just concentrate on advertising to start with, there are 20 advertising people, and they are on 40,000. So the salary there will be 20 times 40,000 will be 800,000. We know that of their chargeable hours, 7%, or maybe one of their total hours, 7% is non-chargeable. So remember that consultants work 200 days in a year, and each consultation takes 1 day. So if we have 20 consultants in advertising working for 200 days, that would, if they were charging at all, give us 4,000 consultations, but we lose 7% of that. It's spent on business development. So 7% that's minus 280. So that is going to leave us there with 3720. The demand is 4,200. So presumably the difference in there, which is 480, is going to be the amount which is taken up by subcontractors. Similarly, the next one, recruitment, 30 people times 200 will give us 6,000 potential consultations, and 22% goes missing there. So that will, if you work it out, leave us with 4,680. And finally, IT support, we have 50 people, potentially working 200 days. And they're losing 12%. So it'll be 1,200, it'll be 8,800. So if there were no other operating costs down here, then the cost per chargeable consultation for full-time staff would, for advertising for example, would be 800,000 divided by 3720. Effectively, these are direct costs. However, we need to do something with the other operating costs here for full-time consultants. This is a global figure. It's effectively as an overhead, and really it needs to be apportioned in some way. So we need a way of apportioning the other operating costs here for full-time consultants. It could be done on the basis of the number of consultants, 20 to 30 to 50. It could be done on the total potential chargeable hours, 4,000, 6,000, 10,000, or it could be done on the actual chargeable hours. The examiner made it clear that any method was fine, because really always the way you portion fixed costs is somewhat arbitrary. So let's stay in line with the ACCA model answer. We can look at it in terms of the number of chargeable hours which are there. So if we add these up, 3720 plus 4680 plus 8800, 17,200. So 1075 divided by 17,200. Per chargeable consultation this is. Of course, the top line is in thousands, gives us 62.5. Therefore, for advertising, the actual cost of the advertising here per chargeable hour, we have the salaries of 800,000. The number of chargeable hours is 3720, this figure here. So 800,000 divided by 3720 is 215.05, and then we have 62.5 to be added onto that. Give us the full cost. So 277.55, and that will agree with the model answer produced by ACCA. You do a similar calculation for recruitment and for IT. We have to look at the subcontractors as well. Well, the variable cost is relatively easy. It's going to be 300 if we just look at advertising again. The other operating costs are 125, and what we'll I think look at here is the number of consultations which they're going to undertake. So advertising, the subcontractors needed 480. In recruitment, there was a demand for 6250. We were going to do 4680 in-house, so that's 1570. And then the other one, 10250 minus 8800, 1450. So the total we've got there, 1450 plus 1570 plus 480, 3,500. So we've got 125,000. That's the total subcontract other operating costs divided by 3,500. Gives us 35.71 in there. So for our advertising subcontractors, there'll be a direct cost of 300, an overhead of 35.71, a total cost per subcontractor consultation 335.71, and similarly for recruitment and IT support. The third requirement was to suggest reasons for the trends shown by the figure contained in the appendix. And I think initially we'd seen that quite a lot of figures didn't show much trend. There was very little perhaps to be seen in full-time consultants, except, of course, when we get to recruitment, which has dropped by basically a third. The rest are constant. The salaries are hardly moving at all. The number of chargeable consultations, the total demand, well, again, they're all falling over 2 years, with a particular fall in recruitment. Advertising a little bit, IT support a bit more stable. And there has been a kind of corresponding increase in the chargeable days spent on business development activities. Now, what may be causing this decrease? Well, it could be external factors, such as an economic downturn. That would certainly stack up with the recruitment days being substantially down, and maybe advertising, whereas people still need to keep IT support relatively high. You have to keep your computer going, so that may explain why that one is kind of stable. Or it could be kind of internal, that they're actually more they're actually losing business. We can't go very much further than that. They do seem to be consistent, however, and planning a little bit insofar as when they see the recruitment falling here by a fairly substantial amount, they have planned for the number of people in recruitment to fall considerably as well. So presumably the fall in the jobs they're expecting is driving the fall in the number of people they're going to be employing. And if we have, by and large, a decrease in the number of chargeable consultations we have, this would allow us, as payers of people's salaries, to keep their salaries fairly constant. Staff will probably be aware that there is less work around, and wage negotiations in such a context become a little bit easier. We've seen that the chargeable days spent on business development activity have increased. This could, again, really be two reasons. It could be a proactive reason that they're deliberately doing this to try and reverse the trends in the number of chargeable consultations. You go out and you're effectively using this as a form of marketing. Or it could be rather more reactive. It could be just a way of trying to keep your staff busy when they don't have anything else to go on. To be in the report asks us to discuss the potential benefits and problems that might arise as a consequence of employing subcontractors. That's for 6 marks. And if we divide it equally between benefits and potential problems, it'd be quite nice if we get 3 advantages and 3 disadvantages. So let's think, first of all, of potential advantages. Well, first of all, it gives you flexibility. When you're busy, you bring in more subcontractors. When you're not so busy, you don't pay them. It gives you variable costs rather than fixed costs. You can use it to plug skill gaps. You can employ a specialist subcontractor for perhaps the rare job that your own people are perhaps not competent to do. So that is potentially very, very useful. And there may be cost benefits. If you had worked out both the cost per subcontractor and the cost per permanent employee, you would find the permanent employees are lower in advertising and support and higher in recruitment. This can go either way, really. But there are potential cost benefits, especially when linked here to the flexibility area. and also it allows you to avoid a certain number of the employment costs, the social costs. Potential disadvantages. Well, there is always a problem of quality. I know the question says these people have worked for us for 3 years, but nevertheless, we're only one of their many employers, and to enforce quality can be a little bit more difficult when these people don't work for you full time. There is business of culture. They are not permanent employees. They do not embody the corporate culture to the same extent, so there may be potential disadvantages there. They may, if I put it like this, steal work. Your subcontractor comes in, gets on very well with the client. Next time the client wants some work done, they go directly to the subcontractor. And there may be some resentment coming from your full-time employees. These people float in, they do a job, then they go away for holidays for 4 weeks, and they seem to be being paid quite well. And quite often what happens with your subcontractors, they do the job, but they don't have to do any of the admin work that so often employees have to do when they go back to the office having visited a client.